Welcome back. Now, global shipping giant Maersk is set to report in about 15 minutes' time, with the earnings sure to be of interest, of course, given the continuing disruption in the Red Sea. Let's do a bit of a deep dive now and bring in Stephane Kovatchev from Bloomberg Intelligence. Stephane, good morning. Thanks for joining us. What are you going to be watching for when it comes to these earnings?
Good morning. I think Q4 results will be very weak at Maersk, with negative net income and potentially negative free cash flow as well for Q4. But the good news, I guess, Tom, is that this should be very much expected by market participants. So 2022 was a record year for the industry and for Maersk. And 2023 numbers have so far in the first 9 months of 23 have been very weak. And we expect this softness to continue into Q4. But I think the key focus here for investors will be on outlook. And namely the situation in the Red Sea and how is this impacting the free cash flow generation at the Danish company.
Well, talk to us about the Red Sea and how it is expected to impact Maersk and how it's impacting its other peers as well. What are the ramifications of the dislocations that we're seeing in the Red Sea on these shipping giants?
Right. Well, at first glance, I think it sounds like a very negative thing that there is, all the disruptions happening in the Red Sea because container ships have to go around Africa, and this adds about 20 to 30% of costs to them. But the reality is, as those ships go around Africa, there's less available capacity in the system. So the likes of Nike and IKEA are fighting for less ships, so to speak. So when you have less supply of ships and similar demand, prices go up. And we've seen price increases of 200, 300%, far outstripping the costs incurred by Maersk and the like. So I think it's currently, at least for the time being, it's a very good environment for Maersk and its peers.
Okay, so actually benefiting from some of the ruptures around the Red Sea, at least for now. And you talked about the freight rates and the jump that we've seen, not to pandemic levels, but nonetheless, as you say, 200 to 300%. It's clearly not insignificant. Where do you see, what is the expectation around where those freight rates go from here?
Well, our base case scenario is for freight rates to normalize and to go lower actually from here. I think it all boils down to supply and demand at the end of the day. And when you look at the demand picture, and consumers across the globe are hit with inflation, with the lower disposable incomes. A recession is also very much a risk, maybe less so in the US, but probability of recession has been increasing here in Europe in the last 6 months. So on demand side is very uncertain outlook. On the supply side of the equation as well, it's pretty negative, so to speak. So when you look at what container shipping companies did during the pandemic with the record profits they got, is they went out and built and ordered new ships. And those take about 2 to 3 years to be built. So we expect about maybe a net increase in supply of new ships of about 8 to 9% this year alone. So more ships coming online, bigger, more cost-efficient ships. So, if the demand side of the equation is quite uncertain and more ships are coming online, maybe freight rates should normalize in the coming months. But the big caveat, obviously, is the situation in the Middle East. That remains clearly a wild card.
Of course, lower freight rates will be welcome for consumers, lower inflation, maybe not so good for the shipping companies. As you say, the demand question and then those additional ships on the market. Really smart analysis. Thank you very much indeed on what to expect and what to look for when it comes to those Maersk in their earnings, which are coming up in just the next few minutes. Stephane Kovatchev from Bloomberg Intelligence with the breakdown